Hello everyone. The topic that we are going to do today is accounting equation, and this accounting equation comes directly from a very important accounting concept, that is dual aspect concept. So we will briefly understand dual aspect concept, and then we will proceed with the question of accounting equation. Okay. So what is dual aspect concept? Dual aspect concept. It says that for every debit, there is a credit. For every credit, there is a debit. Okay. Now, according to this concept, all debits always becomes equal to all credits. Okay. All credits. All right. Now we have already seen that assets show debit balances and capital and liabilities show credit balance. Okay. So this is how you arrive at the accounting equation. All right. All the assets is always equal to capital plus liabilities. Okay. Now, in order to understand this equation properly, we shall first of all go through a question. Okay. So I've already taken a question here. See, the very first transaction is written. But before solving this question, first of all, we shall identify how many types of assets are there. Okay. So the very first transaction says that business started with cash rupees 4 lakh. Okay. So obviously the very first asset that we should write down is cash. Okay. Now let's see what is the second asset. Deposited 1 lakh 15 to bank. Okay. So bank is another asset. So first of all, we shall list down all the assets and then we will proceed with solving the question. Now let's see what is third asset. The third asset is furniture. As you can see, purchased furniture for cash rupees 50,000. So third asset is furniture. Now see what is the next asset. The next asset is purchased goods on credit from Ram Traders. Okay. So goods, or you can say stock. This is another asset. Purchased goods for cash in fifth transaction also. Goods has been purchased for cash and we have already written cash and goods. All right. Now, goods sold costing 30,000 for rupees 45,000. Okay. So here again, no new asset is formed. Sold goods costing 20,000 to Mohan on credit rupees 32,000. Now see, the goods are being sold on credit, and whenever the credit sales is there, the debtors are created. Okay. Whenever you whenever you sell the goods on credit, the debtors are created. So Mohan is basically the debtor. Okay. So one more asset is added to the list, that is debtor. Okay. Now let's move to see the next transaction. Paid salaries rupees 10,000 in cash. Now salaries is paid in cash. Is there any new asset created here? No. Okay. Paid rupees 50,000 to Ram Traders by check. So Ram Traders is being paid by check. Again, no new asset is being created. Received 25,000 from Mohan by check. Okay. So no new asset is being created. Withdrew 15,000 cash for personal use. Again, no new asset. Salaries outstanding rupees 10,000. So this is a liability. New liability is created here. So that's all in the assets column. Now let's write down, complete the liabilities column as well. So assets is always equal to liabilities. And now the very first liability is capital. Okay, as we have seen in our previous session, we have seen that cash account debit to capital account. So whenever cash is introduced to commence the business, capital becomes the liability. Capital becomes the first liability. Okay. Now let's see some other liabilities also. So purchased goods on credit from Ram Traders. Okay. So credit purchase is there, and credit purchase always creates a creditor. So new liability is created here. Okay, in the form of Ram Traders. Purchased goods for cash, no new liability. Sold goods, no new liability. Paid salaries, okay. Paid rupees 50,000 to Ram Traders, okay. Received 25,000 from Mohan by check. Okay. Salaries outstanding 10,000. So that is the new liability that is being created here. Okay. So let's write that down also. Salaries outstanding. Okay. Now let's proceed with solving the question. So here in the cash column, first of all, we will write down rupees 4 lakh. At the same time, we will also increase our capital with rupees 4 lakh. All right. Now, in the next transaction, and you can also notice that with every transaction, the assets and liabilities, the assets and liabilities column will remain same. So here 4 lakh in the assets column also and 4 lakh in the liabilities column also. They are equal in the very first transaction. Now in the second, deposited 1,50,000 into bank. So here cash is being deposited. Okay. But bank balance is increased by rupees 1,50,000. So there is change only on the asset side. There is no change on the liability side. Now what is the cash remaining? Rupees 2,50,000 and 1,50,000 new asset in the form of bank balance has been created here. Is there any change in liabilities side? No. No change in capital. So it will remain rupees 4 lakh. The next transaction says purchased furniture for cash rupees 50,000. So furniture is purchased for cash. So definitely 50,000 will be deducted from cash. Now cash will become rupees 2 lakh. Okay. Is there any change in bank balance? No. Bank balance remains same. Zero change in bank balance. It will remain 1,50,000. But furniture has increased by rupees 50,000. So we will add under the column of furniture rupees 50,000. Okay, 50,000 is added under the column of furniture. Any change on the asset on the liabilities side? No, there is no change on the liability side. It will remain zero. No change in capital. Okay, rupees 4 lakh. Now you can see in the second transaction also we have maintained the assets and liabilities equally. Okay, we have balanced both the sides. 2,50,000 plus 1,50,000 is 4 lakh. In the third transaction also you can see the balance remains equal. Okay, here it is 2 lakh, 1,50,000, 3,50,000 plus 50,000, that is 4 lakh. Now moving to the next transaction. The next transaction says that purchased goods on credit from Ram Traders for rupees 80,000. Okay, now we are not paying cash for it, but our stock is increasing. Okay, we have purchased on credit, but still our stock is increasing. So under the column of stock, we shall add rupees, we shall add the amount of 80,000. Okay, 80,000. Any change in furniture? No. Zero change in furniture. Zero change in bank balance. zero change in cash because it is purchased on credit. Okay, so all these will remain same. And there is a change in liability side also. Okay, because it has been purchased on credit. That is, creditors have increased. Okay, so under the creditor column, we will add rupees 80,000. Okay, no change in capital, it will remain same. So again, the balance is equal, balances are equal still. All right, you can calculate them and you will find that they remain same. Okay, so this is 4 lakh from cash till furniture. If you add them, this is 4 lakh, this is 80,000, and this is 4 lakh 80,000. So both the columns are still same in fourth transaction. Now the fifth transaction is purchased goods for cash rupees 40,000. Okay, so if it is purchased for cash, then 40,000 will be deducted from the cash column. Now what is remaining is 1,60,000. Okay, goods are also increasing, so we will add 40,000 in the goods column. Now goods have become 1,20,000. Zero change in case of furniture, zero change in case of bank balance. They will remain same. 1,50,000. Furniture remains at 50,000. Okay. Is there any change in capital side? No. No change in capital side. Or you can say zero change. So it will remain zero. Creditors are also not paid, so they are also zero. This is 4 lakh, this is 80,000. All right. Moving towards the next transaction. The next transaction is sold goods costing 30,000 for rupees 45,000. Okay. See, first of all, the goods are sold, so goods are getting decreased. So we will deduct 30,000 from goods column. And obviously, goods are always sold on profit. So 15,000 profit, if you can see, 45,000 is the amount at which the goods are sold, and the cost of goods were 30,000. And we always record goods on cost in our balance sheet. Okay. So in our accounts, or you can say in our accounts, we record the goods at cost only. So we have recorded the goods at rupees 30,000. So 30,000 is deducted from the goods column and 45,000 is added in the cash column. Okay. Zero change in bank balance, however, and zero change in furniture also. Now, the cash becomes 2,05,000. Okay. Bank balance equal 1,50,000. It remains unchanged. 50,000 for furniture. Okay. But for stock, it is 90,000. All right. Now the question is there any change on capital side? Yes, there will be a change on capital side because the goods are sold on profit. Okay. And the profit belongs to the owner. All right. Because owner has invested the capital and the profit will be added back to his capital. Therefore, 15,000 profit will be added to the owner's capital. Now owner's capital becomes 4,15,000. Okay. Zero change in case of creditors. Okay. They will remain 80,000. All right. Moving to the next transaction. The next transaction is sold goods costing rupees 20,000 to Mohan on credit for rupees 32,000. Okay. All right. So here our debtors are increasing in this case. See, I have already maintained the debtors column as well. Okay. So debtors, under debtor column, 32,000 will be written. Okay, 32,000 under debtor column. And since goods are sold, so goods are decreasing, therefore 20,000 will be deducted from goods, and 32,000 will be added in the column of debtor because the goods are being sold on credit. Okay, so now goods become at 70,000 and the new asset, that is debtor, becomes 32,000. The remaining assets are not changing at all. Okay, they remain same. 2,05,000 plus 1,50,000 bank balance, 50,000 furniture, 70,000 for stock because the stock costing 20,000 has been sold, and the new asset has been created in the form of debtor, that is 32,000. Now in the debtor, if you can see, the profit is included. Okay, the stock costed rupees 20,000 and it was sold for 32,000. So 12,000 profit is added in the sales amount. Okay, and that profit will be added to the capital. Okay, why it is added to the capital? Because it belongs to the owner. Okay, now that becomes 4,27,000. Okay, this is 4,27,000. There is absolutely no change in creditor. Okay, so it will remain same. All right, now in this stage also, if you will add all the amounts, you will find that it becomes equal to the liability side. If you add all the amounts on the asset side, it will always remain equal to the liability side. Fine. Now moving to the next transaction. Paid salaries 10,000 in cash. Okay, if it is paid in cash, then 10,000 shall be deducted from cash column. 10,000 deducted from cash column, it will become 1,95,000. All right. Any change in bank balance? No, zero change. Any change in furniture? Zero change. No change in stock as well. No change in debtor also. 1,50,000 for bank balance, 50,000 for furniture, 70,000 for stock, and 32,000 for debtors. Now, will the capital change? Yes, capital will change. 10,000 will be deducted from capital. 10,000 will be deducted from capital. Why? Because it is an expense. All right. If the profit is added to the owner's capital, then expense will be deducted from the capital also. All right. So what it becomes? It becomes 4,17,000. All right. Now no change in case of creditors. They will remain same at 80,000. Okay. Now paid rupees 50,000 to Ram Traders by check. Now if you can see, Ram Traders were our creditors. See, Ram Traders were our creditors. In the creditor column, we have written rupees 80,000. Okay. In the creditor column, we have written rupees 80,000 and they are being paid by check. So from bank balance, 50,000 will be deducted. Okay. 50,000 will be deducted. However, we have to pay them rupees 80,000, but only the payment of 50,000 is made right now. Okay. So bank balance remaining is rupees 1 lakh, and creditor balance after paying 50,000 is rupees 30,000. All right. And the rest of the items will remain same. No change in cash, no change in furniture, no change in stock. Okay, no change in debtor also. They will remain same. And it is very important to write down the balance of the amount after each transactions. Okay, that is 32,000, and it is equal to zero change in capital also. 4,17,000 capital remains same. Okay. So again, in this step also, both the assets and liabilities remain unchanged. Okay. However, they have changed, but the balance is always equal. Okay. Instead of saying unchanged, we must say that they are balanced in this step also. Received rupees 25,000 from Mohan by check. Okay. Now we have to identify where was Mohan. So Mohan is a debtor here. Okay. We have sold goods worth rupees 32,000 to Mohan. Okay. And Mohan is paying 25,000 from check. Okay. So 25,000 will be added in the bank column, and from the column of Mohan, 25,000 shall be deducted. Okay. No change in case of liability. The change will only occur in asset part. Okay. Cash is not changed, and no other asset is changed. Now we will write down the balance of asset after this step also. That is 1,25,000. That is 50,000. 70,000 for stock, and the debtor has decreased. Okay. So 7,000 is remaining. In case of capital, there is no change. 4,17,000, and creditors haven't changed in this step. They are also 30,000. Now, 11th transaction says that withdrew cash rupees 15,000 for personal use. Okay, withdrew rupees 15,000 cash for personal use. So cash is withdrawn, so it will be deducted from the cash column. The cash becomes 1,80,000. Okay. No change in case of bank balance, and all the assets remains unchanged. $50,000 for furniture, 70,000 for stock, 7,000 for debtors. No change in case of capital. Okay. It will remain 4,17,000. No. Capital will change. Okay. Why capital will change? Because drawings reduces the capital. Okay. So it will become 4,02,000. Okay. Now let me repeat this again. See, cash of rupees 15,000 has been withdrawn. So from cash column we have deducted 15,000, and cash drawing is also the opposite of capital. It reduces the capital. Therefore, from capital side 15,000 has been deducted. All right. Now the creditor remains unchanged at 0. All right. The last entry is salaries outstanding rupees 10,000. Okay. Now there will be no change on the asset side in this case. Okay. Only liabilities side will change here. Okay. Salaries outstanding on the liabilities side under the column salaries outstanding, we will add rupees 10,000. Okay. We are going to add rupees 10,000. And this is the last transaction. Now, I have already mentioned that the expenses decreases the capital. Okay. The expenses decreases the capital. Why? Because see, the capital is being invested by the owner, all right, and all the expenses and all the profits belongs to owner, all right. So if there is a profit, capital is increased, and if there is any expense, it decreases the capital, or you can say it decreases the profit, and therefore it results into the decrease of capital also. Okay. Now 10,000 outstanding salaries will be decreased, will be deducted from the capital side. Now it becomes 3,92,000. Okay. Creditors remain same, and salaries outstanding, the liability, new liability has increased here. Okay. Now no change on the asset side. So we will write 0 every on each, under each of the asset, we will write 0. 1,80,000, 1,25,000, that is 50,000, 70,000 for stock, 7,000 for debtors. Okay. Both remains equal. Okay. Now, if you will calculate the balance of both the sides, that is assets and liabilities, you will find that they remain equal. All right. Okay. So this is it in the session.